Shan, Josh makes good points. Blowout reports in many cases, and the stocks are not following through. I said yesterday that, the worst nightmare for the bulls is you have rates backing up yet again and mega caps selling off substantially, even on pretty good earnings reports. We got a problem with that? I mean, what's going on?
Those coincident factors are certainly a challenge.
Yeah.
If you think about what we're facing, and I think the cost cutting that Josh was talking about is really important because it goes beyond the ability to insulate the business for 2 or 3 quarters. It goes to what happens in 24 and 25 so that we can recapture the margin that has been lost over the last couple of years. And I think that, it does require growth, but it also requires mix. You have to be in the right place at the right time. And I think what we're seeing is that if you look at Microsoft in terms of cloud, they're getting a bump from AI. You look at Alphabet, they're not getting that same boost, and so we're talking about optimizing spend. I think when we look at what's happening in the environment, if we didn't have rates where they are today, I think we're going to be seeing a little bit of a different reaction to some of these tech earnings. But again, this is what we anticipated. There is no catalyst right now for a ceiling on rates. And until there is one, until there are implications in the market that either the Fed is done or the Treasury is going to back off of issuance, it's going to be really difficult for any specific stock report to turn the tide.
See, Jimmy, we needed, right? You figure you're coming in, you need mega cap to counteract, if you will, the move that we had in rates. It's the whole neutralizing factor to rates going up if you're a bull like you are in the market. The other problem now is that I love the way that Joe put this yesterday, the Magnificent Seven becoming the Magnificent Five. Okay, take another one off the list. Now it's the Magnificent Four after Meta has a really good report. We're talking about the stocks, okay? Stock goes down. Are we going to be talking now about the Magnificent Three because now we have to take Apple off the list? In other words, you can't take them all off the list. Not with all of the things that are out in the market right now.
Okay, I take your point, absolutely. And I think, though, that it's actually beyond the Magnificent 7, 5, 3, 2, 1 blast off, whatever you want to say it's going to be, because all stocks really are performing badly right now. This is a heavy tape. Folks, the sentiment out there stinks. And if you ask me why that is, it's what Scott said. It's interest rates. Now, we can talk about the Middle East. Historically, geopolitical military confrontations do not cause the stock market to go down in this sort of direction and with this sort of magnitude. And I don't think it's the looming threat of a government shutdown or even the circus in the House of Representatives. I think this is squarely on interest rates. Interest rates being as high as they are is too much for earnings, no matter how good they are, to power through. So where that leads us to is, how long are they going to be this high? Are they going higher? And for that, it still, in my opinion, rests on the Fed, and the Fed rests on what's going on with inflation. Tomorrow's PCE matters to me. I know it's I'm tired of saying that, guys. Folks, I'm really tired of saying it. Shane and I had a little sidebar.
You can't be dismissive. It sounds like you're a little dismissive of the macro, which, if Meta's CFO is talking about uncertainty regarding the macro, then we need to pay attention to the macro, despite the fact whether you think it's legit or not. It seems to be having an impact.
I am so glad you brought this up, and I had a robust discussion inside my firm today with my analyst community, and they said the same thing, right? The macroeconomic data, like last week's retail sales or this week's weekly jobless.
I'm talking about
Let me just finish.
Middle East, geopolitics, the uneasiness to open up and spend a lot of money with a lot of uncertainty out there.
There is a discrepancy between what the data is saying and what the companies are saying. All right. And I certainly did not miss what Meta said last night. I certainly did not miss it. OK, there's 2 explanations for this. One, the data is lagging. We know that the big macro aggregate data is lagging. But to the point about Middle East and the volatility, that is likely to be temporary. However, in this environment where you've got Middle East hostilities, where you've got Ukraine war still going on, where you've got a circus in Washington, D.C., it is highly unwise for CFOs or CEOs to come out and be ebullient on the demand environment. They're taking too much risk. But when you look at real-time data like TSA traveler count, I mean, it's extraordinary high. People are not.
That's not going to dictate what this economy as a whole does, because people are on airplanes. I'm sorry, but there's just a lot of other factors. You can't constantly go back to TSA numbers and butts and seats.
Scotty, hang on. Scotty, I don't disagree with you. That's why I also look at weekly jobless claims, and I'm telling you, the labor market is the most important thing.
I agree.
Okay, thank you.
I don't disagree on that.
It's the most important thing. So I hear you on TSA being too specific. Hear me also on weekly jobless claims. I'm done.